Finance guru Dan Geltrude is with us. Central bank policymakers suggest that the path of future interest rate hikes could be slightly steeper over the next few years than previously thought, according to minutes of the March Federal Reserve meeting released on Wednesday. Guru, what does this mean to potential home buyers and overall to the U.S. economy?
To start with, King, no one should be surprised that interest rates are going to be rising as the economy gets stronger. But what this means, plain and simple, is that borrowing money is going to get more expensive, because if the Fed is going to raise interest rates as part of managing the economy, then the cost of money is going to get more expensive. And the reason behind this, by the way, too, is the reason that the Fed will raise these interest rates is because they don't want the economy to overheat. In other words, have the economy grow too quickly. What you want to have is a sustained growth a little bit at a time, and you want to keep that trajectory going up. You don't want to have a situation where you're having peaks and valleys. And tweaking the interest rate is part of how the government tries to assist in that process. Now, right now, the economy is steaming along. We all know that. And keep in mind that the benefit of the new tax law and the tax cuts haven't even hit yet. So we're going to see the economy, once the tax law starts to grab hold, to even go at a faster pace, which is why we're going to see interest rates ticking up and ticking up and ticking up potentially each quarter. So what is the impact going to be on potential home buyers, which is interesting, because what happens here is if interest rates are going up, borrowing is going to become more expensive. But actually, there's an offset in that if borrowing becomes more expensive, King, then that monthly payment goes up. It simply means that a lot of home buyers are not going to be able to afford homes that the way they had been previously priced. So I'm looking at this and saying, actually, I think it impacts sellers more than home buyers, because if people want to sell their house, if it's going to become more expensive for people to make monthly payments and they could only pay a certain amount each month, the only thing that's going to be able to move here is the price of the home. So sellers are going to have to adjust their pricing in order to be able to move it. So let's also keep another thing in mind, too, with the new tax law and the limitation related to state and local taxes, which includes property taxes. Now, there have been discussions and forecasts that the real estate market in high-tax states, such as us in New Jersey, are actually going to come down like 10% because of the new tax law. So when you put together the new tax law and rising interest rates, it's going to be current homeowners that are looking to sell that are going to feel it more than the potential home buyers, in my opinion. Now, as far as the overall economy, if the Fed does it right in the way they're handling the interest rate, I don't particularly see anything major happening with the economy. I think the economy can continue to grow at a very nice pace, probably for a prolonged period of time, or as long as we can have it go. So that's how I view this. I don't particularly see a huge impact on home buyers. I see it more on homeowners and potential sellers. And as far as the U.S. economy, I think if it's managed properly, we'll do okay.
All right, the finance guru, Dan Geltrude, another edition of Dollars and Cents in the books. We thank you, Guru, for your expertise and look forward to talking to you again next week. Thanks so much.
Thank you, King.
Thank you.